Hey hustlers, welcome back to the channel. Thank you so much for clicking onto this video. We talk about entrepreneurship, personal finance, self-development, and we have a bit of lifestyle here, so please do click that subscribe button while you're at it. Today's video is financing your car in South Africa. My video last week was all about things that you should know before you buy your car. Today's video is just specific about certain terms and certain things that you should know during the car financing process. So if you want to find out what these are, then of course keep on watching. So the first thing that I want to mention is deposit. And what a deposit is that it's cash paid upfront to reduce the loan and the monthly repayments. So for example, if your car that you want to buy is worth 300,000 Rand and you have managed to save 50,000 Rand cash as a deposit, the only amount of money that you will be looking to finance is of course 250,000 Rand instead of the total amount. And if you are financing 250,000 Rand instead of the total 300,000 Rand, over a period of time you would have saved interest and also monthly prepayments on that amount as well. So having a deposit for your car is very important. Saving up, even if it's 10,000 Rand, even if it's 5,000 Rand, any little amount that you can put up as cash up front on buying your car will help in the long run. Then the next thing that I want to go through, which is very important, is interest rates. And this interest rate is basically the percentage that is charged on the car loan. That is what an interest rate means. Now there's two different types of interest rates. There's a fixed interest rate and there's a variable or linked interest rates. Fixed interest rates basically means that this is the percentage that you'll be charged over this period of time. So if your loan term is 36 months or 48 months or 72 months, this is the fixed interest rate that you'll be charged during the duration of the loan. And monthly prepayments stay the same, nothing is affected. You just know what type of amount you'll be paying until the end of that loan process. And variable or linked, this is related to or is linked to the prime lending rate in South Africa. So variable lending rate or the variable interest rate is related to the prime lending rates in South Africa, and it fluctuates. So if the repo rate goes up, obviously your interest rate is affected and your monthly prepayments are also affected and they increase, and vice versa. The South African Reserve Bank just recently adjusted the repo rate by 0.25, so they decreased it, and my loan is variable, so I got an SMS from the bank to say that my monthly prepayments will be adjusted by a certain amount to account for this change in repo rate. Now there's pros and cons to both fixed and variable interest rates, and this is very important that you must know and understand what these mean for you and your financial situation. Fixed interest rate could appeal to someone who wants to know what is the exact amount that they'll be paying for the duration of the loan, irrespective of what happens in the economy or anything of the sort. That's what they'll be paying and that's the amount they want to commit to. On the other hand, variable or linked interest rate will appeal to someone who wants to save a bit of money during the course of the loan, and you know, you're not too stressed about the fluctuation of the interest rate and you'd rather take a bit of a risk there, because now with the repo rate changing, you are saving some money and paying less on your interest rate. However, the variable interest rate is very tricky in the sense that you can't really predict with South Africa in a technical recession and the economy being as unstable as it is. The net effect of the variable interest rate at the end of the day should be in your favor, and if it's not, you end up paying a bit more. So what I mean by this is, this year the repo rate has increased, so obviously that increases your monthly payments. Then next year it's adjusted, or 3 years later or 2 years later it's adjusted again and it increases. So every 2 years your monthly repayments on your car increases because you're paying more interest. That will at the end of the day put you in a far less position than someone who's picked a fixed interest rate. Most banks choose it for you. They don't really give you an option to choose fixed or variable. However, if you are given the opportunity to choose, or on your contract and you're reading through and you see the word variable, linked, or fixed, you must know what it means. And if this is something that you feel like you need some assistance with, I would highly suggest that you contact or speak to a registered financial advisor who will help you through this process. But this video is just obviously to give you just the basics and just skim through important things that I would say are important during the car financing process. Then the next thing, and another fun fact before I move on to the next thing about the interest rate, is that it's calculated at repo rate plus 17% a year. That is the legal highest rate that they can charge you on a car loan. So if you are getting charged more than this, obviously contact someone, read through your contract, and make sure that you are not being charged more than what is actually legal. Then the next thing is residual value or balloon payment. I'm pretty sure some of you guys have heard of these terms before. And what a residual or balloon payment basically means is that it's the portion or the amount that's taken off the loan, right? And you need to pay this as a lump sum at the end of the loan term, or at the end of the loan period. What I mean by this, your car is 300,000 Rand, and the bank or the lender or the financial institution or the financial provider that you are looking to get financial assistance from or borrow money from are willing to give you a 20 to 30% balloon payment on the purchase price of your car. Now, it's 20 to 30%, and that's the rate that most institutions use to obviously give you a balloon payment. And this amount is taken off the total amount of money that you actually pay interest and monthly prepayments on. Now I know that this sounds really interesting and this sounds really great, and this is like an option that we mostly, myself included, go for, because this reduces your monthly prepayments and your interest rate at the end of the year. However, the catch is at the end of the loan period, you need to pay this lump sum over. So if on your 300,000 Rand car they are giving you 50,000 Rand as a loan, as a balloon payment amount, that 50,000 Rand at the end of the period you need to pay as cash. And a lot of the times when we take the balloon payment and we're buying our cars and we're so excited we got a balloon payment, we're now paying less and we're paying less interest, and we don't have to worry about the balloon payment for the next 5 years, because that's how long your contract is and the prepayment term is and all of that. And then you get to the end of the 5 years and the bank is like, thank you, my money please, can I have my balloon payment? And you haven't saved up for that amount during the years, and you end up either refinancing, meaning taking another loan out to pay back this balloon payment. You either end up trading in your car, and sometimes you have to fork out some money to obviously cover that balloon payment amount. You either sell your car, but you just try and make a plan to make ends meet. If you are opting for the balloon payment option, make sure that you have an emergency fund. You are budgeting in that amount each month. You are saving towards your balloon payment, because you don't want to be refinancing at the end of the period, and you don't want to be finding yourself in a situation where you are now getting yourself back into debt after this whole time. So yes, balloon payments are great in helping you reduce your monthly prepayments and in just basically reducing the cost of paying for your car monthly. But you need to remember that at the end of the period, that money will be required from you as a lump sum payment from the bank, and you need to have this available up front so you don't find yourself refinancing and getting back into debt again. Which brings me to the next step, which is insurance. The most common thing, or the only insurance that is accepted with a balloon payment or a financed car, is a comprehensive motor vehicle insurance. And what this is that it's an insurance that covers you, your car, and a third party claim. So should you get into an accident and maybe you hit someone and they claim from you, your insurance will be able to pay that back. And what the banks do, they don't allow you to drive away with the car, drive off with the car from the dealership before you have actual proof of insurance. What this helps them with is that if you drive off and that car gets stolen and you get into an accident, they have surety that they will be able to recoup that money that they have given you to buy that car or pay the dealership for that car. So that's why it's important to get insurance. On the topic of insurance, I want to discuss and talk about lower premium versus lower excess. Now, lower premium basically means the monthly premium that you pay for your insurance. If it's lower, most of the times your excess amount will be higher. If it's lower, you're paying lower amounts each month. However, should you get into an accident or you need to claim, the higher the excess amount is, the lower your prepayments or premium will be. And also vice versa, lower excess meaning you are paying a far less amount should you claim, or the excess amount is far less, but your prepayments are much higher. And I'll just use numbers to clarify this if you're a bit lost. So lower premium, higher access is if your car, this 300,000 Rand car that you are now insuring, you are paying 1,500 Rand premiums each month, but the excess amount is 10,000 Rand. So should you get into an accident or claim, or need to claim from the insurance, you need to have available 10,000 Rand to pay as excess. On the other side though, a higher premium and lower access, you are paying 2,500 Rand as opposed to the 1,500 Rand. However, here your access is only 5,000 Rand. So for you need to decide for yourself what your financial position is, what can you actually afford, and what makes sense for you financially to do, because you don't want to be paying low premiums, get yourself into a situation and have to fork out 10,000 Rand and get yourself into debt. Now you're taking out loans, now you're using your credit card, and there's so much financial background information and stuff that you should consider when buying a car, not just the purchase price of the car, but all these other stuff as well. And I just want to talk and touch on factors that determine your car insurance price, because I mean, car insurance prices differ for different people and different cars and so on and so forth. And the first thing is the market value of the car. So how much does the car actually cost? The age of the car, the older the car, the more prone you are to be paying a bit of a higher premium, because the car is probably going to need more claiming and all of that stuff. They like factor in. The next thing is the age of the driver, which I know is quite like, wow, what? And also sometimes the gender. Are you a male? Are you a female? Where is this vehicle stored and what is it used for? And by stored is like during the day, they will probably ask you when you are like getting an insurance quote or taking out insurance, they'll ask you what is the daytime address of the car, where is it parked during the day, and then they'll ask you about like at night, where is it parked? Is it parked off street? Is it parked in a gated environment? Is it parked in a carport, or is it covered? So should there be hailstorms happening, or like is it easily accessible to theft, or someone like smash and grab? Is it parked in a garage? All of those things. And by them asking all these questions, they just want to assess the risk, because at the end of the day, insurance companies are businesses and they want to make sure that the premium that they are charging you is they are able to make some money out of you at the end of the day. So if, for example, you live in a high risk area that's very prone to hijackings of the type of car that you have, your premiums will probably be much more higher, because they want to make sure that they are covered as well as a business. Should you claim, they're not having to be forking out more money than they are getting back from you. Then something else is like secondary driver. So if there's someone else driving, the behavior of your secondary driver, and like, does your car have a tracking device, and all of these things they will ask, just to make sure that they are assessing your risk to them as a business and how much should they be charging you. So all of these things you need to factor in and consider when you are taking out insurance. And another thing that I want to really stress, which is very, very important, that a lot of people don't do, and this is to ensure that the correct depreciated value of your car is recorded by the insurance to lower your premiums. Let me explain. The correct depreciated market value. Let me explain what depreciation is. Depreciation is the reduction in value of an asset over time due to wear and tear. And cars can normally depreciate anything from 15 to 20% per year. So when you are requesting insurance and you're getting a quote from the insurer on the purchase price or on the market value price of your car, the following year your car will not be worth what it was worth when you took that insurance. So make sure to call the insurer and be like, hey, I'm here to get the updated market value, updated depreciated market value of my car, so you can save some money on your monthly premiums. This is something a lot of people don't do, so please do this. On a on anniversary of your insurance date, call your insurer, find out how much you'll be saving. And some people can save anything from 400 to 500 rand on their premiums, and over time that actually accumulates and you can save quite a bit of money. So please make sure that this is a step that you are doing, because depreciation has to be accounted for, and a lot of insurance companies don't adjust this on your behalf. It's your initiative, and you should be doing this for yourself to save yourself some money, because remember, at the end of the day they are a business as well. Which brings me to the last and final step, which is the finance and insurance department at a dealership. Now, when you're buying a car, most dealerships, actually it's most common that most dealerships have their own in-house finance and insurance department, which help you with the financing process and just going to their service providers and people and banks that they're affiliated with to help you get the best deal on buying your car. Now, if you are going to be using the finance department in a dealership, make sure that they are FAIS accredited and that they legally have your best interest at heart, and they legally shouldn't be giving you biased advice or information. This is very important, because a lot of the times these places want to refer you to their affiliated bank, and maybe that's not the best option and that's not the best financial decision for you, and they could, you know, be advising you and coaxing you towards making a decision towards their bank, instead of actually teaching you and coaching you and making a decision on something that will help and make sense for you. And if you are using their financial assistance, it could help you in the sense that dealerships have this thing of they are allowed. So what happens at a dealership, let me just explain the type of business model it is. Their markup percentage is really small, so it's not that big. So where they make their money is they are very volume driven. So for them, it's not about how much profit they're making on each car, but it's about how many cars in total and collectively have they sold to meet their sales targets, right? So on each salesperson, they are maybe given a discount of about 30,000 or 40,000 or 20,000 per customer that they can allow to be discounting off and giving you a great deal and all of that, because at the end of the day they're trying to seal the deal and close the deal. And most of the times, or sometimes, that discount can be attached to your financer. So if you are using their own in-house financing or an affiliated bank that they use, they could put together a good deal for you that obviously would make you want to use them. And sometimes you've seen some adverts that say car financing or car repayments at prime less 2% or at prime less 3%. That's the discount that they've factored in. However, you need to be very careful and be very conscious and be very well read, and that's why personal finance is so important. You need to know all of these things for yourself, so that when you are in the process of using them and the affiliated bank, you read through and make sure that all the terms and conditions and all these extra added costs, you understand where each of them is going, because they could give you a discount on your car financing, but then they could add this money back towards, you know, the dealership costs, like making sure that the car is ready for you, registration costs, admin fees, etc., and they could add this discount back that you think you are getting into these extra added costs as well. So you want to make sure that the best deal that you can possibly get, you negotiate, you ask as many questions, and you actually question a lot of things, and you show them that you actually know what you are talking about, and you know, you are conversing with them in a way that they can see they actually won't take you for a ride, because you know what you're about, you know your personal finance terms, and you've watched this video, and you know you've been hooked up, and you're like I know you guys try to catch me out and all of that stuff. So it's very important that you read and research for yourself before going to a dealership and committing to that deal. I hope you guys really enjoyed this video, and I hope you found it really helpful. Please comment down below if you found it helpful, just by saying helpful, so I know how many people really enjoyed this video and how many of you guys found it really helpful. As always, keep hustling. I will catch you guys on my next video. Bye.